if you could take your money out of Apple, out of a Tesla, and you had to keep it in tech land, companies you cover, you'd put it where?
Well, look, I think more broadly, if we, a lot of people ask us about FAANG and how do we think about relative FAANG. And, our observation, and this is a house view, Bernstein covers the other FAANG stocks, is when we look at the valuation of Apple, it's trading above the valuation of Facebook and Google and pretty close in line with Microsoft. And so if we were looking to migrate within large cap tech, at Bernstein, we have outperform ratings on those other three FAANG stocks simply because we think their growth prospects are better than Apple's, and they're trading at or below Apple's current valuation. So, I would say within the context of a very large cap tech, as a firm, that's what we would be recommending. What
do you do in EV land? Or you just don't touch it?
I think EV land is very, very tricky. I mean, if I kind of step back and I look at the aggregate valuation of the broader automotive sector, it's basically doubled over the last year. Now, a lot of that is Tesla. Maybe 60% of that increase is Tesla. But you still had the market go up about 40 or 50% from other new EV entrants. So you've had a marketplace that is becoming increasingly competitive. The number of new competitors entering this space is tremendous, both domestically and overseas, in terms of pure EV players. You also have the traditional OEMs who are ramping up EV product. So you've had an industry that's become dramatically more competitive, and yet, when we look at the aggregate market capitalization of that industry, it's more than doubled, and that doesn't resonate with me. My belief is the global automotive industry is a hyper-competitive industry. It always has been. No one has more than 10% share. There are local market preferences. There's been tremendous innovation in terms of electronics and safety over the last 15 years, but margins haven't gone up for automotive companies. So what we're seeing is a bid up in the entire space, and that just doesn't resonate with me. I think 25 years from now, there'll be fewer cars sold, and I'm not so sure the margins are necessarily going to be better because it's such a competitive industry.
Shepard Smith here. Thanks for watching CNBC on YouTube.